Hey everyone, and welcome back to Everything Tesla stock. Tesla, like every other stock, is not immune to the volatility of the stock market, and therefore, it's only expected to find some irregularities in the stock price. Likewise, even though Tesla bulls and investors desire for the stock to continue on an upward trend, the stock is still subject to market factors which can potentially hinder its growth. While there are justifications to stay bullish on the stock, there are also possible reasons why analysts may need to lower their expectations of the stock performance. Such may be the case for long-term Tesla bull Cathie Wood, as she warns Tesla investors about what the future may hold for the EV company's stock. What is Cathie Wood's warning for Tesla investors? Let's find out, but before we do, if you like this type of content, hit the like button and stay subscribed to our channel and turn on notifications to keep up to date on everything going on with Tesla. According to ARK Invest CEO Cathie Wood, the economy is plunging significantly due to inflation. However, this isn't the only problem for investors to be worried about. Wood stated that aside from the problem of inflation, companies are also likely to suffer the hit of deflation. Cathie Wood claims that 50% of the S&P 500 is at risk of creative destruction, and most companies, especially automakers, are underprepared for the effects of deflation. Wood added that automakers could suffer bad deflation, as well as commodity deflation if proper steps are not taken. What does this mean for EV makers like Tesla and its investors? Keep watching to find out. While speaking about the issue, Wood stated that the automakers are likely to struggle following the creative destruction caused by deflation. Companies that are running their shares in the short term with less investment in innovation may find it difficult to keep up with the coming market challenge. Likewise, automakers and products that can become obsolete are going to have to sell these commodities at a discounted price or risk incurring a massive loss. Also, in the case of commodity deflation, where inventories surpass demand, car companies may have to sell their cars at lower prices to cover the cost of production. This is not the first time Cathie Wood is revealing her concerns about deflation. In 2021, the stock investor warned that deflation, rather than inflation, will be the largest risk for financial markets and the economy in the coming years. Wood stated that she expects the US economy to grow less than many economists expect in the year ahead. Cathie Wood also believes that only companies with a competitive edge on innovation can thrive amidst the expected deflation. She added that the decreased economic growth is going to prompt a shift back into the type of companies that can grow regardless of the economic backdrop. This is likely where Tesla bulls have a sigh of relief, since Tesla has been impressive in terms of innovation. However, considering the rising competition in the EV market, Tesla may have to do more to maintain its leading position. Ford and General Motors, which are Tesla's main competition, have committed to electric vehicle production and development. The company's stock surged earlier this year after they made this announcement, and there seems to be efforts to make it happen. If Tesla's competitors eventually improve their electric vehicles, Tesla may lose its market in several countries. Factors such as this seem to be a major concern for Cathie Wood, and there have been previous news of ARK Invest selling some of its Tesla shares. Earlier this year, 3 of the company's EFTs reported selling shares of Tesla. The investment company had sold Tesla shares worth $41 million, although ARK still owned 1.44 million shares of the electric vehicle company, which is still about the third largest position in its ETF. The move did seem quite bullish on Tesla. Likewise, Cathie Wood sold nearly $270 million in a stake in Tesla in 2021. Wood's investment management company sold more than 340,000 Tesla shares across 3 of its exchange-traded funds. Actions such as this may appear quite unexpected for a long-term Tesla bull like Cathie Wood. Also in similar news, Tesla lost its position as Cathie Wood's main fund for the first time in about 4.5 years. Tesla had maintained a top position by market value in ARK Invest's exchange-traded fund. The car company held shares worth about $703 million until it got replaced by shares of the electric product maker Roku. Wood's ARK Invest held $717 million of Roku shares. Although the investment company previously owned nearly 1.59 million Tesla shares, the narrative soon changed, indicating pressure on the stock market as a result of the plunging global economy and a rise in interest rates. However, although these moves seem like Wood had lost conviction in Tesla, that may not be the case. Wood has been a long-time supporter of Tesla, so it is somewhat unlikely that such a Tesla bull will go bearish on the automaker. Cathie Wood once revealed that Tesla occupies a top position on ARK Invest's portfolio and has a combined market value of about $762 million across all of its ETFs. So, it may take more than a possible deflation problem for her to shift grounds on the stock. Although Wood had previously made high price targets on Tesla stock, this shows that the investment experts expect a lot more from the EV company. In April this year, Wood revealed that she expects Tesla stock to rise to $4,600 by 2026. She added that this is achievable if Tesla succeeds in developing and rolling out self-driving robotaxis. Similarly, the ARK Invest CEO adjusted her Tesla price to $1,533 following the recent 3-for-1 stock split on Tesla. Setting a probability of 25%, Cathie Wood stated that in a bearish situation, Tesla stock will hit $966 in 2026, and in a bullish case, it could go as high as $1,933. Looking at Cathie Wood's warning, companies like Tesla that are keen on innovation may actually be able to overcome the troubles with deflation. Tesla has always had an upper hand on innovating and innovation compared to its competitors, and no other EV company seems to even be coming anywhere close to that. Tesla's electric vehicles have a high rating in the market. The company's Model 3 and Y are making huge sales in Tesla's markets globally. According to a new study on auto loan revealed by online leading marketplace LendingTree, these Tesla car models top the charts as the most common cars seeking auto loans in the United States. Also, Tesla is not the only producer of electric vehicles. The company's range of products like batteries and solar panels are doing remarkably well in their markets, and there's almost no way these products are going to be obsolete anytime soon. And with numerous innovations that have been revealed by Tesla CEO Elon Musk, Tesla may perform way better than expected. The automaker has several interesting products in the works: robotaxis, semi-trucks, the humanoid robot, full self-driving, and this is something many of Tesla's competitors are far from achieving, at least not for a few years. Also, the company has collected vast amounts of real-world data, far more than its competitors, which gives it an edge in quality innovations. For Tesla, the issue of innovation is not a thing to be bothered about, but rather other pressing challenges like battery supplies, which heavily affect the production capabilities. Wood also agrees that Tesla's innovations are highly unmatched in the EV industry. The analysis has constantly reiterated the significance of these projects in boosting Tesla's market potential. It's evident that Cathie Wood is highly bullish on Tesla, even though she shared her fears about the stock, which is expected of a Tesla fan. Wood is known for making her support of Tesla public, and so it is fair for her to share her concerns as well. Earlier this year, Wood publicly revealed her dissatisfaction after Tesla was removed from the S&P 500 ESG index. The automaker was removed from the sustainably focused stock market, even though it produces electric vehicles, solar panels, and battery packs. Wood made it clear that the action was unacceptable and termed it rather ridiculous. Also, although there are times when Cathie Wood sold her Tesla shares, there were other times when the stock market bought heavily on the shares. Wood's investment management company recently added more Tesla stock to its portfolio. The company bought 3,162 Tesla shares, estimated to be worth $2.29 million at the time of purchase. Wood believes that Tesla's battery technology is at least 3 years ahead of other automakers, and this is owing to the company's development in its AI chip. Tesla's gigafactories are on top to ramp up car production and delivery. Also, Tesla is well on its way to making massive revenue from its expected car models, taxis, and robotics. It's clear that Tesla still dominates the EV market, and based on its innovations, it is well poised to continue leading the industry. However, just as Cathie Wood cited, there could be big market challenges on the way for Tesla, which will require the automaker to be well prepared for what may come. What do you think about Cathie Wood's warning to Tesla investors? Will Tesla's innovations be significant enough to beat deflation? Let us know down below, and while you're still here, go ahead and click on one of these 2 videos on your screen. See you there!